very good morning to everybody. It is Thursday, January 5th. It's just after 6 a.m. And very little to cover, although we do have a very extensively busy day ahead of us as far as economic data. 7:30 in the morning, we get Fed Harker. At 8:15, we get the ADP employment change, international trade. Most importantly, what has been effective as of recent is the initial jobless claims. But it really doesn't matter because at 9:20, just 10 minutes before the market opens, we get Fed Bostic, who's been a little bit of a dick. And then you get the S&P PMI and the composite PMI for services, composite PMI final 945, not much to look at. We do get crude inventories at 11 o'clock, but at 1:20 in the afternoon, we get Fed's Bullard. Now, Bostic's been a little bit of a dick, but Fed's Bullard, he is an absolute asshole. If you recall going back last year in the middle of the year, Fed's Bullard was getting table time all over the place. It was as if he was jockeying to take Jerome Powell's spot. So at 1:20, we could have ourselves an absolute nuclear bomb that goes off and we just destroy the 3800s and head down to the 3700s. I'm just putting it out there. And there's a little bit of reason why. Before I go over to that, yesterday we had 4 good spread trades. You had a little bit better than 5% on that safe edge on the calls after we had that pop in the morning. We did get that risk trade over on the calls, 38.95, 38.90s. The risk trade over on the puts, again, having closed above 38.15 almost every session except that one on December 28th, paid out 67%. And then you got another, I want to say it was 15, 17% on the safe side over on the 37.70, 30.70, 75s. So again, this stuff works, man. It works. It really, and it takes going to work, especially if you're on the East Coast, it takes so much stress out of your life. It's it's not perfect, but it works. It works. It works. And the good thing about it is, if in case you have the ability that you can roll the trade over to tomorrow, which again, that's why we're here. That's why we're here to give some ideas and some guidance as to what to go with. But as of right now, I'll pull the futures up real quick. I apologize for taking so long on the intro. I apologize. Here we are. We're fractionally up over here on the futures. When I started here, we were flat. Now we're up 6 points. We're still really far off of the highs of the week. The NASDAQ is still the shittiest one out there, still having major problems getting above that 268, 269 level on QQQ. Right here, this 11058. But I want to point out a couple of things. Your RSIs over here on the 1 hours are pushing bullish and getting very close to being overbought. They're not overbought. They're not screaming overbought, but they're headed towards that. And what I tend to notice here is my custom settings on the upper Keltners and the lower Keltners, how they start pointing up and start looking like Pac-Man. It tends to be a very indicative display that we are going to get a major move. And unfortunately, as of the recent few months, when this takes place, it's always a move to the downside. So I'm just preaching a little bit of caution and a little bit of support for that caution. And that is, we closed green yesterday. And that's like the worst thing that could happen to you anymore. It really is. We closed green yesterday. Now, we closed green back on December 29th after we had a down day. And we closed green on December 23 before we went into Christmas. But you go back months. I'm not talking weeks. I'm talking months. And to see 2 days back to back, that's your limit. And after that, you're getting 2, 3, 4 red days in a row. And so, again, it's a scary scenario that has been very consistent. And even when we had that rally off of the October lows up to that 4,100 in November, we still weren't closing green back to back to back days. We were getting one, we were getting two, one, two. We weren't getting a consistent run of three, four, five, which is like what I was mentioning in the beginning of the year in my review, that when we start seeing those 3 days in a row and another 3 days in a row, and then, maybe even 4 days in a row where we're green, we can really start believing that we have honestly bottomed and we are going to be heading for that 4,300 area, possibly even 4,500. But we need to start seeing those green days start piling up. So, two things to cover. I'll go back here real quick, very quick. And a lot of you guys that are new might say, what's wrong with this guy? Well, tomorrow is the full moon, January 6th, full moon. We get 13 of them, and I've gone back for the entire year of last year. I don't need to go back to 2021 or 2020 because I had them there as well. When the full moon comes, you're typically either plus or minus 3 sessions when you're placing in the absolute low of a wave or an absolute high of a wave. Like over here in October, we had the full moon on October 10th. 3 days later, we hit the bottom. And you can go back and look at these full moons, but within 3 sessions, we tend to hit either our top or our bottom. And as of right now, bring you on again. Don't have the chart up here, but I've said it and shown it multiple times. We have 4 red weeks in a row. And the last 2 weeks, granted they were Christmas and New Year's, are pretty much doji candles. We were down 8 points on Christmas week. We were down 4 points at the end of the year. So count them if they are as honestly red weeks or not, but go back through history like I showed last year and multiple times during the course of last year and prior years. To see three red weeks in a row that's your limit. You don't see more than 3 red weeks in a row. Go as far back as you want to look. When you do, you start seeing a rare 4. You do see some 6s. I believe there are 6 of them going all the way back to 2000 or 1987. And last year we had 7 in a row back then after we had that March high. So caution. Again, we had that green day yesterday. Caution, because these Fed guys are here. We have now trolled this area here for a good 3 weeks. You recall we had trolled that 39.50, 39 or 40.50 area for a good 3.5 weeks, nearly 4 weeks, before we suddenly had that drop after we hit 4,100 back when Powell spoke at the beginning of the year. Or at the beginning of the end of November, and again when we had that visit off the FOMC. But here we are trolling in this area. So again, caution is extremely caution what we have, because we've got the Fed speakers today, a little bit of data. Tomorrow we have the jobs report, and then we got the announcement that next week on Wednesday, Jerome Powell will be speaking. Next week on Thursday, we have the CPI report. So the table is set that this can go in either direction in a very strong and powerful way. So caution is all that I'm saying right now. We're looking for upside, but we've got to be a little bit careful. So I'm sorry. I'm going on. This is the SPX. Again, we're just trolling in this area, not getting any movement whatsoever. Quickly over here to the VIX. The VIX starting to fill that weekend gap. Okay. Now, when the VIX gets down here to this 2102 and below the 2102, what has been pretty consistent is that has been very, very bad for the bulls, for people that are long, for people that are in calls. It has been a, quote, more or less trigger point for an aggressive move to the downside in the indexes, in the stocks, in the ETFs to suddenly take place. We're watching this very, very closely. We've almost filled the weekend gap. We are going to be watching this really close. But one of the things that I've started to focus on for about 2 months now is the VIX kind of got a little bit out of whack. SPY and QQQ 0 day trades or 0 days to expiration. Uh, the VIX kind of got out of whack. It wasn't as dependent as it used to be. And I started watching over here with the CPC, the put call ratio. And again, when you're above one, it's an extremely bearish sentiment. But somebody shared something with me this morning, and I haven't had a chance to read through it and really go through it. But they were also suggesting that what you're seeing on the VIX and what you're seeing on the put call ratio isn't actually bearish, it's more protection. And that in and of itself supports the idea that we are going to be moving for that 4,300, 4,500 as we start heading into the end of Q1, the end of Q2, that time period. But here again, the easiest way that you could probably look at that and indicate it would be Apple, Big Mama Apple. And you see your volume profile down here. There was a hell of a lot of people buying down here in this 125 area. We still have that 2022 close area, 130. We start seeing Apple back above 128, pushing that 130, and even breaking above 130. You can start breathing a lot smoother and simpler, looking for that upside continuance that we are actually moving towards that. So, again, not really too much to go over. You've got all of these speakers that are going to be here today. We've got the data. That's why we play the spreads, to focus the attention to see how many push-ups they can't do, how many sit-ups they can't do. If they can do 100, okay, we'll bet that they can't do 110 or that they can't do 200. Safe, risky. And again, guys, have a fantastic morning. I hope you like the intro. My buddy just made that up yesterday. I don't know if I want to use it every day, but I figured I'd try it today. Have a great morning, and I will see you in the chat room.